What are some good ways that you can save money on your taxes? Like reduce your tax bill or tax liability, or increase your refund so you can have more money in your pocket, increase your after-tax wealth. I want to talk about some tax planning strategies in this video and the next few videos to answer this question. But I'm not just going to give you specific ideas about how to save money. I will do that, but I really want to help you understand what makes a good tax planning strategy. Why do they work? So that you can better apply the treasure map that is the Internal Revenue Code or the tax code. Hi, I'm Steve Hunt, and I am a certified public accountant. I'm the consultant for prosperity and adventure. I'm the expert at helping people like you reach your dreams faster. I'm also the owner of collegetaxrefunds.com, which is where we help recent college students and their parents and families collect thousands of dollars that they don't even realize they missed on their old taxes. So if you have a recent college student in your family, there's a good chance that, especially if they got scholarships or grants, they missed some money. Have them check out collegetaxrefunds.com, and we'll see if we can help them claim money on their old taxes. As I said, I want to talk about tax planning strategies today and how you can save money on your taxes. And I'm going to do a little overview right now of what it means to strategize and plan for your taxes and how that can help you. And I am not going to go into all the details or just share with you ideas. I want to help you understand what this means. I'm going to use some slides that I used when I taught income taxation at Brigham Young University, Idaho, and Montana State University. And so that's why the slides might look like they come from a class. But anyway, like I say, we're starting and pretending as if it's the end of the year. Maybe it's November, December. And the question I have for you is, are you this year planning to do any tax planning to reduce your taxes? Maybe do you know a friend who's going to do some tax planning? Do you know someone who's actually going to go and talk to a CPA about their income tax situation before the end of the year? Now, most of us don't even like to think about our taxes except in February, March, or April when the taxes are coming due. And the problem is that at that point, there's very little that we can actually do to change the tax result. There are a few things, like putting money in your IRA before the tax deadline, and some other things that you can do. But making an election to depreciate some of the things you bought last year in a certain way. But my point is, because the year is already over, once it's time to sit down and do your taxes with your CPA, there's often not a lot that you can do to change the result if you don't like the result. So sitting down before the end of the year and discussing tax planning strategies is a very wise thing to do. So what are some ideas that you've heard of, that you've read about? I'm just going to quickly name a few, and then in the coming videos, we'll explain why these ideas work. Can you think of any? One of them might be that you're going to contribute to charity before the end of the year. If you're a member of the church, you might donate some additional tithing before December 31st. Maybe you'll donate to Wikipedia or some other charity that you support, American Red Cross or anything else. These things then you can deduct on your tax return if you get it done before the end of the year. Or maybe you're going to pay a business expense early. Say you know that you're going to have to pay some utility bills the first couple days after the new year, but you want to go ahead and reduce your income tax this year, so you pay those a little bit early. That might be one way to reduce your tax this year. Another tax planning strategy could be buying some business equipment that you need. You're eventually going to need, say, a new truck, and you've got some extra money lying around in your business, and you want to make sure that your taxes are lower, so you buy the truck now instead of next year. Or maybe not a truck, maybe you need a new computer or something like that. So one way is to buy something that you'll eventually need. And another strategy that maybe you've heard of is to bonus your employees. And maybe you haven't heard of this one, but hopefully you've been a part of a business where bosses bonus their employees around the end of the year, Christmas time. Now this slide does say this Christmas time. I'm just talking in general about the holidays or before the end of the year, before New Year. And maybe you're in a business that likes to pay out bonuses in early January after the close of the year, after they see what you've done to wrap up the end of the year. But if you're trying to save on taxes this year, it might be wise to consider giving some of that bonus early. Your employees might actually be really grateful for that because they can use it to buy gifts during the holidays. But additionally, you will be able to save some extra money, which means paying those bonuses early actually benefits you as the boss. Maybe you want to hire your kids into your business. let's say that generally you pay your kids or buy clothes for them or pay for their transportation, or you otherwise buy toys or gifts for them regularly, and maybe you give them an allowance. But see, none of those expenses are actually deductible on your tax return. But what if instead you could teach them some responsibility and some work ethic by hiring them to do something for you and to add value to your business? And now you're giving them cash, which you then tell them they can use to go buy their own clothes and to buy their own treats and gifts and to spend their money that they've earned for themselves on things that you otherwise would have bought for them. And now all of those expenses become deductible because you're paying it to them as a salary. Or maybe another tax planning strategy, way you could save on taxes, is to have your business or your corporation pay you rent. Let's say that your business owns a building that it's doing business in, and you would like to reduce the amount of tax that you pay. Your business has a high tax rate. Maybe you have a lower tax rate, especially on rental income. And so you might transfer the property into an LLC or into some business that you own and start paying yourself rent. This is getting really deep into tax planning strategies where the business can now deduct the rent and reduce the tax that they pay. And now you're going to pay tax on that rent, but it'll be lower because you have a lower tax rate or because rental income isn't as highly taxed. And here's another one. I don't know if you've heard of this in terms of a tax planning strategy, but it is, you could have a baby before the end of the year. Now, unfortunately, if you're just deciding to do some tax planning strategy in the last couple months of the year and you haven't been thinking about this one in advance, you're not going to be able to get this done by the end of the year, as I'm sure you're aware. But definitely, if you have a baby on January 1st or January 2nd, you've missed out on some important tax deductions and some important credits that are available to you if you just had the baby a little bit early. Anyway, I know this is kind of funny as a tax planning strategy, but it's actually what I practice, what I preach. I mean, I've had several kids that were born at the end of a year, in part because that's just a wise financial way to do it. Once again, as I think I mentioned earlier, if you wait to actually try and impact or affect your taxes when it's already time to file your taxes, that's basically too late. There's only a few little things you can do before the tax filing deadline, usually, that will help you reduce your taxes for last year. But there are several things that you can do before the end of the year, and so if you sit down regularly with a CPA or tax planning strategist, a consultant for prosperity and adventure, some kind of business consultant that knows their stuff with regard to taxes, then you can actually make an impact and save money. And let me show you what the rewards for that can be. For this, I want you to imagine two possible scenarios. Scenario one, where you pay $500 maybe on advertising or some kind of marketing, and the result is $1,000 of additional sales. And scenario number two, where you pay your tax expert, your tax planning consultant, $500, and the result is that they're able to spend a few more hours talking to you, working with you, or just helping you save $1,000 on your taxes. So you might think that the results are essentially the same. You've spent or given away $500, and then you've received or saved $1,000. So it might be essentially the same thing, doesn't matter, but that is not the case. Let's take a look at what happens in these two scenarios. So in option number one, where you pay $500 to increase your sales by 1,000, the net taxable income is $500, which then you will have to pay tax on. Let's say your tax rate is 20%, so you're going to spend $100 on taxes, and you'll pocket, after paying taxes, $400 of after-tax wealth. Option number two, where you give $500 to your tax planning CPA, will not get you any taxable income, because when your CPA saves you money on your taxes, that tax savings or increased tax refund is not taxable income. And so you get to deduct the $500 that you spent on your tax accountant, which means that you will still save on your taxes overall. You're going to save, because that $500 will reduce your taxable income by $500, which, if your tax rate is 20%, saves you $100. And the work that the accountant has done with you to help you increase your tax refund or lower your taxes saved you another $1,000. So now when you take the $500 you've spent, and then that money has gone out, but $1,000 has come into your pocket as tax savings, and then another $100 has come into your pocket as tax savings because of the money you spent on your accountant. So the net result is $600. That's your after-tax income. So you see, it's better to spend $500 tax planning to get $1,000 than to spend $500 on marketing or advertising to get $1,000, or to spend $500 on some employee who's going to be able to bring in $1,000. So that's the reward of tax planning. And as kind of a side note, half joke here, the best tax accountants are going to make all of your tax go away. Now, that's just kind of a tongue-in-cheek thing, because a lot of people like to go to their tax accountants and say, I hate paying tax. I don't ever want to pay any tax. And of course, the tax accountant can say, well, that's fine. Why don't you just pay me all your money? Then we can deduct it all from your tax return. You won't have to pay any tax on it at all. That's obviously not what most people want to do. Paying tax means that you're making money. But as I've said, planning with a tax advisor, a CPA, can help your business, and it can help your business even more than spending money on other things. Thanks so much for paying attention to this video that's an overview of tax planning strategies. We've given just a few ideas of what those strategies might be and why they're valuable. And in the coming videos, I'm going to talk a little bit more about why those tax strategies actually work. Please, again, go ahead and put your comments below. If you have any questions about taxes, I'll try to answer them, and maybe I'll create another video to answer them. But thank you so much